Hey, welcome back. My name is Alex, and in this channel, we document the growth of a $100,000 account I've created for my newborn son. We're growing the account using technical analysis, fundamental analysis, and some news. And on the weekly portfolio update segment, we're going to go over some key positions that have outperformed this week. We're going to go over the market monitor and what it's pointing to going into next week, and maybe some news items. So if that's what you're into, stick around. All right, and to start this video, I just thought I'd highlight one of the best performing stocks in the portfolio this week, and that's CDE, Core Mining. And this stock is a gold and silver miner, and it released earnings, I believe, yesterday or 2 days ago. And yeah, I mean, it's up, I think, 31% for the week. And I mean, we were doing some buying, a couple months ago, and I'm gonna put up that chart as well of where we were buying and where we were trimming. But we're really enthusiastic about this stock. We think that the gold and silver miner trade, especially the smaller miners, is actually just getting started here, and we'll talk about that later on in the video. But yeah, we're really excited that we got some stocks that are making big moves. So with that, let's go check out the market monitor segment and see where we could be going into next week. All right, so for those of you who are new to the channel, the market monitor is essentially a collection of data I've taken over time. It tracks all the stocks of the market, where they're at, whether that they're highs of the day, lows of the day, and also some other breadth metrics. And if you guys are curious about anything in the market monitor, I linked a video in the description so you could check out, what all the columns mean and what I'm tracking. So with that, let's get into it. So currently we are, and I'm making this video intraday, so it could change, but currently we are market monitor green, and we are day one green. And so far, we've moved about 0.7% as of the making of this video, and the average green cycle lasts about 12 days and moves 3.7%. So we had that little dip in August that had a full red cycle that one day, and then we got it all back. I made it in other videos, and yeah, we're just really bullish the market. But there are some things that I'm going to talk about, in this market monitor segment that are pointing to a very bifurcated market where there's been a lot of selling underneath, but the markets, the indexes just keep going higher. So with that, let's get into some internals. All right, so as you can see here, this is the stage analysis, and basically what this does is it tracks whether stocks are in uptrends, downtrends, or sideways after an uptrend or after a downtrend. So that's stage 1, 2, 3, and 4. And as you can see here, we're pretty bifurcated. Actually, it's the market monitor as of today. This doesn't include Friday's data. This is Thursday's data. Is actually showing that the majority of stocks are increasingly going into downtrends. As you can see, the average 16 is an average of the last 16 data points, and stage 4 and stage 3 are above average, and stage 2 and stage 1 are below average. So number of stocks that are in uptrends are decreasing, and number of stocks that are in downtrends are increasing. So moving onwards to more internals, the VIX has actually subdued. We kind of peaked, I think, last week at about 20 during that dip, and then now we're back to 16. One thing to note is the 10-day trend. As you can see here, this trend column is finally starting to pick up, which it hasn't this entire rally. It's been under 1, which is always pretty bullish. So it's above 1, which tells you, they're starting to sell the bid there. So we're going to keep monitoring that. And the correlation index is down to 14. But as you can see, from some previous data, when the VIX was at 16, the correlation, I think a week or two ago, was at 10. Now the VIX is back at 16 and the correlation's at 14. So underlying correlations have increased, meaning it's a little bit more bearish because more things are moving together. And as you can see here, this 20 bull and 20 bear, that's the number of stocks making 20% moves in 5 days. And typically you don't see this type of market where you have many stocks in this column, above 30 making 20% down moves. Okay. And there's also 83 stocks making 20% up move. So I know it's earnings season, but it tells you that like there's a lot of winners and losers going on. And there's a lot of stocks getting hit really hard, and there's a lot of stocks mooning really hard. So it's just one of those markets where if you're in the right stuff, you're just like crushing it. And if you're in the wrong stuff, you're losing a lot. So it's just very interesting. Also, you can see this HH and LL column. These are higher highs and lower lows with a certain volume filter that I put on there. The last basically, 2 weeks has just been massive selling, lots of lower lows. Also in this bull C and bear C column, as you can see here, I mean, it's just been dominated by stocks ending at the lows of the day. And it's just been very bearish for the majority of stocks. Now, the indexes keep going higher, but the majority of stocks, I mean, I went back in time and I looked at this, and I mean, I haven't seen another time where the markets just keep going higher, the indexes, but then there's this many stocks in bearish combo. So that's very interesting there. So moving onwards to more overbought and oversold indicators. So right here, I have this BB45 column. This is the number of stocks above their 50-day, or sorry, 45-day Bollinger Bands, and the number of stocks below their 45-day Bollinger Bands. And also you can see here a bifurcation. There's many stocks below and there's many stocks above. That's very rare. Typically the market is moving together, especially with the correlation as low as it is, even though that index only tracks the top 50 stocks in the S&P 500, so that makes a lot of sense. But essentially underneath the surface, there's a lot of stocks getting hit and a lot of stocks mooning. Yeah, very interesting. And you typically see that at tops of the market, right? Just food for thought. Moving onwards to this 5% G and 5% R, that's another metric that just confirms what we've been seeing throughout the entire market monitor, is that there's a lot of stocks making 5% moves on big volume and a lot of stocks making 5% moves down on big volume. And we just finished a big down wave, and now it's increasing, right? So, but we still have 157 on the short-term momentum up and momentum down. That's also rare. And then TD buy is showing the underlying selling pressure. And that's just a momentum indicator showing number of stocks that have gone down 9 days or more, at closing lower than their close 4 days ago. So, yeah, and then the breadth, the 63P and the anxiety index is also, elevated. And then the lastly, the thing is the breadth, the long-term breadth. This NY column is the 200-day advanced decline line, and it's almost at zero. So two things could either happen. Either that means that we're about to have a big rally because the market's oversold breadth-wise, or we could be entering into a bearish market where, because typically if this thing goes below zero, the trigger is like -20. When this thing hits -20, it's like a real signal because around zero, it still could actually explode and go much, much higher because it's oversold at that level. So we'll have to wait and see. I mean, just a very interesting market. We could absolutely explode to the upside here. I mean, we're starting with a day one green cycle as today is. So that's the market monitor update. Let's go check out the portfolio and see how we're doing. All right, so for those of you who are finding any value out of this video at all, I really appreciate you guys sticking around. If you guys enjoy it, smash that like button. Would really appreciate it. Yeah, and with that, let's move on. So right now the portfolio is sitting at 109,722. And yeah, we're down on the month, but this week we're up considerably. I think it's a good week. And as you can see below, this is how we're performing versus the S&P 500. So we are still outperforming the S&P 500 from the inception of the account year to date, and but we've lost a lot of that outperformance. Like we were outperforming a lot, but because of what's going on, as you can see in the market monitor, things are getting sold, and we're a diversified portfolio with leaning more towards these kind of smaller caps. We've lost some of that outperformance recently within the last, I'd say a month or so. So we're monitoring that. We might make some changes, but there are some highlights. But just thought I'd let you know that. All right, so moving onwards to the majority of the portfolio, right here, you can see the heat map for what what we're holding. Essentially, the bigger the block, the bigger the allocation, The smaller the block, the smaller allocation. And what you can see is the majority of the count is pretty green here, but as you can, if you look at some of the stocks are down deep red and some of the stocks are deep green. So what we're going to focus on today is some of those deep green stocks, what that means, going forward, what themes are hot, and then also, maybe we talk about some of these stocks that are deep red, what's going on there. But as you can see, the bonds are doing okay. Most of the large positions are doing okay, like the gold and silver miner. That theme is alive and well. I think what's happening today, at least, is the Brazilian stocks are doing well. We had STNE, and that's doing really well. And I think a lot of these CLO funds. So we have some of these CLO funds, as you can see here, OXLC and EIC, and some of the other ones, the FSCO and FSK. These BDCs. It's telling me that the underlying economy could be, weakening here because these are equity trusts, these are debt instruments. So with that last schism last week when we had the news of the employment numbers not doing so well, I think these guys have already kind of been showing that the last couple months they've been going down a lot. Maybe we might actually end up getting rid of these things because they're just going down, and there's no point of holding these things that are going down so much because you can't even sell calls on them. And the yield's kind of pretty useless. So we might change that. But interesting to note that underlying the economy seems to be weakening, but there's also things that are mooning, like still the AI trade is doing really well, and that. So with that, let's go get in some charts and talk about some themes and see what we're going to do going forward, what moves we might make in the portfolio, from the chart standpoint. All right, so what you're looking at here is ticker symbol BMNR. This is Bitmine Immersion Technologies, and I'm sure most of you have heard of this stock. This is the Ethereum treasury company that's run by Tom Lee, and there's also a lot of influential investors involved in this stock. And today, it's up about 30%. And we have a small position in the public account here. I think we put about 0.6 or something. We had made a trade on it earlier. We captured this and we sold a little bit, but then we held it, and it went down a lot. But then, on this earnings, or sorry, not earnings, but they had an offering. We re-upped the position, and now the position's sitting at like 0.6%, which is, pretty meaningful considering the stock has a very high ADR, and it's breaking the VWAP today. So I did some DD on this, some fundamental stuff. And, if you use the what MSTR, Michael Saylor, his guidelines for when to sell shares, because that's what these guys do. These Ethereum treasuries or Bitcoin treasuries, they sell shares and then they buy more of the underlying asset, which is Ethereum in this case. Saylor is using a 2.5% net asset value premium to start selling shares. And then when it gets to 4x, he'll definitely sell shares. So the net asset value of BMNR, I think of making of this video is about $25. So, we did the math out to be like, okay, they're not going to sell any shares until about $60. And right now it's about 52. And if the Ethereum price keeps going high, that net asset value changes. But I mean, we got the move, it's at 52 right now. This thing is breaking the anchored VWAP. So now everybody's up on it. This thing is just looking really strong. It's looking like it wants to continue higher, at least to $60 before they start selling shares, right? So, and then also there's a pipe, early investors who got in at about like $4 can sell in October. So I was always speculating that, okay, at least they're going to probably pump this thing into October before the pipe. So maybe this gets back to all-time highs. Since the portfolio's got about 0.6%, we're looking at, maybe a 2% gain for the account, which would be great. Considering the account's up like what, 10, 13-ish% currently. So that's one stock, we're keeping an eye on. This thing did really well. And just, we're looking at this level right here. The $60 level is the big resistance. So it might just hit $60 and stop there. And so we're just going to monitor it. Okay. But it looks pretty bullish today. So moving onwards to another big winner. So STNE just had earnings today. Now we were worried about this because I mean, the Trump got into a big scuffle with Brazil, and essentially put a lot of tariffs on them. And then the moment that happened, this stock went down 25%. But we have a good cost basis here. We were buying this thing at around I think 850, $8, and longer term, if you look at this thing, this was a monster stock in COVID. And it's just been going sideways this entire time. And we are making the case, as you can see down here below, this is on balance volume. It just basically calculates, if it's an up day, it adds the volume. If it's a down day, it lowers the volume. I like to use this indicator to basically just see, okay, is there more activity on up days, or is there more activity meaning volume shares traded on down days? So typically, bullish stocks have more activity on up days, and it also will tell you if there's more up days or more down days. And so, if you put it at the bottom of the base, down here, you can see that, okay, there's been a decent amount of shares accumulated. So there's some accumulation there, and we are going to make the case that, okay, if this thing breaks out, this thing has a long way to go, and especially with today's candles, the strongest candle in a while, to be honest. We're pretty bullish on this thing, and we might add to it actually, because we have this PAGS, this other Brazilian stock that trades a little bit, but it's a little worse. So maybe we get out of this. We've been in this for a long time, but maybe we just add it to STNE, because this thing is obviously stronger. We have these $16 calls sold on it, but we're going to see what happens there. So we're really enthusiastic. It's up about 11.5% today, making a nice move. So we're enthusiastic about that. And this is a Brazilian fintech stock. So with a lower dollar, it's going to do well. With better relations with the United States, it's going to do well. So that's that. So moving onward to CDE, which I talked to at the beginning of the video. This is a gold and silver miner, and it had great earnings. This thing's growing, I think, like 30% or something massive, and it's breaking out of this massive base. This thing is just looking awfully good. And we look at the stage analysis here. It's breaking out of this sort of cup and handle sort of a thing, and it's got this monster base. If this thing gets going, hey, maybe it hits $50. Back to the 2008 highs. So we like this stock. It's doing what it needs to be doing. And one thing I've gotten into, like this on balance volume thing, is you could tell if a stock is going to be explosive or not because of whether people are trapped in this thing, whether people sold out of everything. As you can see here, they've sold out during this down wave right here, and it's basically moon. So anybody who was in this thing got out and is now chasing. So that's really awesome to see that. I put this moving average on the on balance volume, and it's really good for showing trends. And this thing is just breaking out of the yearly moving average of the volume. And so I think it's got a lot of room to run. This thing is just acting totally good. So that's great. Maybe what I can do today is show you some of the losing stocks as a little bonus, because I know we've gone pretty long here. But yeah, let's talk about some of the losers that we're eyeing. So this apps, this thing was a great stock. It had earnings, and it's the lowest amount of interest it's ever had. It's an advertising company. They sold some shares, but this is a really fast-moving stock when it gets going. We're still bullish on it, but it's unfortunate that they sold the shares, because it did go up to like $6 or something, but then they sold some shares. So monitoring apps, I think we might add to it because it's still a decent stock, decent industry group. Just needs to get moving. One thing that we've been really disappointed in is this Moderna. Still going sideways. It's coming back in. It is getting accumulated, so we just need to be a little bit more patient with this thing. But it is back down here. We've been selling calls the whole way, which we're getting a lower cost basis. It's great. Our cost basis is kind of down here now. It's been actually one of the winners of selling calls, because of everything else is doing straight up. But Yeah, we're monitoring that. But actually, we had another healthcare stock, this Tempest AI, that released earnings today. Kind of gapped up. Still bullish on this thing. This thing actually looks pretty decent here today. Uh, and if it gets out of this range, that's what it's gonna do. Um, it's being accumulated. You could see here with the volume. It's not that far from the moving averages. Their moving averages are going into an uptrend, so it just needs to get going here with good earnings, and it seems like it's trying to do that. And yeah, gonna monitor that. But I think what we wanted to do this week was, maybe talk about one regret that we've had this entire year is we've been hedging. We've been hedging the account with the QQQ, and the QQQ's obviously just been going up. So one thing that I want to share with you guys that I think it's really important that I learned, especially in a market like this that has basically just gone straight up, and we're using a diversified portfolio and we're trying to hedge. Is moving forward, what I think we're going to start doing is if the market monitor is yellow, we're going to go and just be in VIX calls. But if the market monitor turns red and we get a rally, say like this day right here, that's when we're going to actually buy puts in anything. Because I've realized that like if the market keeps going higher and you will have VIX calls, you don't lose as much on the VIX calls versus if you have puts, you lose more on the puts. So whenever market monitor goes yellow or is in red, we're going to be buying VIX calls pre-dump. And then once it starts to dump, once it goes into the red, that's when we're going to try to grab some puts, okay? Because, I mean, I just think that, like, the amount that you lose when the market's just going higher on the put side is much greater than just buying VIX calls, out the money VIX calls, like 25 delta or something like that. So that's something we learned, especially in a market that's just, very, very strong. Yeah, just the VIX calls are much, much better as a hedge if it's going against you. Because, I mean, the portfolio would have been outperforming much, much more this year. I think we gave about 300 basis points to hedging so far this year, which is, I think, a little bit extreme. But, on those down days, it does help. It's great. It lowers the volatility, but it's still, over time, I think VIX calls are a cheaper way to get that protection and to get that lower volatility we're looking for. So, hey, with that, that's a little tip at the end. I hope you guys have a great weekend. And yeah, I'll see you guys on the next one. Cheers.